There are 2,129 homes scheduled to be auctioned this week. That's up 21% when compared to the same week last year. New South Wales will host 794 auctions, with about 120 of them in regional areas. Victoria will hold 845 auctions, with most of them in Melbourne. Queensland will host 305 auctions, with about half of them in regional areas. South Australia will hold 114 auctions, with most of them in Adelaide. Western Australia, Tasmania and the Northern Territory will hold 25 auctions between them, and the ACT will hold 46 auctions. Taking a look at the most viewed properties going to auction this weekend, and in New South Wales, it's 9 Belvedere Avenue, Castle Hill. This giant 6-bedder sits on about 1,000 square metres. The top property in Victoria is 2 Legalian Crescent, Mulgrave. This 5-bedder has a price guide of about $1.3 to $1.4 million. The top property in Queensland is 20 Donald Street, Camp Hill. This classic home has 5 bedrooms and a swimming pool. The most viewed in South Australia is 14 Herbert Street, Plimpton Park. This bright 3-bedroom home has a price guide of $920,000. And the most viewed property in the ACT is 65 Whitmore Crescent in Watson. The most viewed property on the REA Group website this week is number 64 to 66 Berkeley Street, Hawthorn in Melbourne. This large 5-bedroom home sits on about 1,300 square metres in an area of Hawthorn called Scotch Hill. The residence has extensive gardens, huge living and dining areas, poolside entertaining, a tennis court, home cinema and underground parking for 8 cars. The 3-level home is covered in ivy and built using Mount Gambier limestone. There's also a 1-bedroom apartment hidden underneath the tennis court. It also features 2 driveways and 2 pedestrian gates, plus 36,000 litre water tanks for irrigation. Price guide for this one is $8 to $8.8 million, and expressions of interest close on August the 15th. For more on property, I caught up with Eleanor Cray, Senior Economist, REA Group, a little bit earlier.
Certainly seeing an uptick in the number of properties coming to auction, and certainly it's kind of unseasonably busy, one would say. It's actually the busiest week since the kickoff of the autumn selling season. Now, I think what we're kind of continuing to see is that, I guess, seller confidence is continuing to buoy with the uplift in prices that we've seen so far this year and the ongoing recovery in home prices. And of course, the fact that we have seen less stock coming to market. So that is continuing to create these, I guess, relatively competitive buying conditions, which is probably adding to the impetus to vendors to bring their property to auction.
Yeah, it looks like there's about 21% more for sale this year compared to the same week last year. So seems pretty unusual.
Yeah, look, certainly very different conditions to this time last year. So if we cast our memories back, we know that home prices were falling in most markets last year. Interest rates were rising very quickly at a fast clip. And I think now we've got quite different conditions in that auction clearance rates have been a bit stronger. Property prices are moving higher. And we're also seeing, I guess, that the end of the tightening cycle is in sight, or we're certainly closer to the end than not, which was very different last year, which was creating a much more of an uncertain market environment, and I think really dampening not only market conditions but auction market conditions. Yeah,
cash rate at 4.1%. Is there also potentially maybe people that might have an investment home that could be struggling to with the repayments, are now putting those properties up for sale? Is there a possibility of that too?
Yeah, look, it's possible. We have seen, we do track investor sales at realestate.com.au, and we have actually seen that the pace at which investors are selling investment properties or properties that were purchased and then listed for rent on realestate.com.au has actually pulled back from the very high level that we were seeing throughout COVID. And we're also seeing that investor purchases are picking up a little bit as well. So, of course, that could be part of the story.
You mentioned clearance rates. How are clearance rates holding up right now?
So we're seeing that clearance rates are holding relatively firm at the moment. They're certainly a lot firmer than they were towards the back half of last year when interest rates were very quickly rising and those market conditions were very different.
Yeah, there's a lot of speculation about whether the RBA needs to lift rates again potentially on Tuesday. Do you think we're going to see one more increase for Australia's economy?
Look, it's a really tough call and it's certainly far from a sure bet. Now, we have seen this week in the inflation data that it does look like, I guess, the momentum in price pressures is continuing to subside, even though we did see services inflation continuing to push higher and certainly rent price inflation playing into the still strong inflationary pulse. So we know that inflation does remain, I guess, well above target, and it is going to take quite a bit of time for inflation to come back down towards the target band. But I think we're heading in the right direction, and it probably gives the RBA some leeway to continue their pause next week and give them a little bit more time to better assess how economic conditions unfold, given that we're looking for that soft landing while simultaneously bringing inflation down back to target.
Yeah, you mentioned the rental market. Just how much of rent's really been going up and increasing to the CPI index this year?
Yeah, so the rental market remains incredibly tight, and that strength that we've continued to see really over the past 2 or so years in terms of advertised rents on realestate.com.au is continuing to flow into paid rents in the CPI. So we are seeing that when we look at the last quarter, so the June quarter CPI, it was actually the strongest increase in rental prices since 1988.
Wow.
So really strong rental price pressures that we're seeing in terms of advertised rents flowing through to that CPI basket. And we've seen that in terms of advertised rents on realestate.com.au, they've actually risen 17% across the capital city markets in the past 12 months. Okay. So we're probably going to continue to see some of that ongoing rental price increases continuing to flow through to the consumer price index as, you know, rents are renegotiated and old leases roll over and the like.
And conditions for rental market in the regions, is it getting a bit better out there?
Yeah, look, that's probably the silver lining when we look at the rental market at the moment. So we know that conditions in the rental market are incredibly tough, but we are starting to see that for the most part anyway, in a lot of regional markets, we're starting to see those rental price pressures coming off a little bit and vacancy rates beginning to ease. Although in most markets, conditions do still remain tougher than they were, say, 3 years ago or before the pandemic onset. But we are starting to see an easing in conditions, certainly in regional rental markets. It's a bit of a different story in the major capital city markets, though.